So the Fed had their latest meeting today, Wednesday, November 1st, 2023. Rates were left unchanged, which is no surprise. But the interesting thing was some of the language tweaks that Chair Powell had in his press conference, even though the statement from the Fed was pretty much the same as it was last meeting. So what I want to look at here with you is the 10-year yield. This is the TNX.X, so this is 10 times the current yield price. And let's dive in because the charts are showing some interesting action for what you can reasonably expect over the next few days or weeks on the 10-year. Now, if you're new here, I'm Hima Reddy, and I use price, time, and momentum. That's the speed of the market to boost my trading and that of my tribes. Now, whether you've been looking at charts for a long time or you're just starting, understand that every one of these candles on this particular chart is an entire month of the 10-year history, all right? And I want you to focus in on the month of June 2007. So June 2007 was actually a very important month, and it has three important levels. One of them was recently tested, 48.74, in the month of October, which just finished yesterday. But notice how after breaching 48.74, the month closed at 48.75, basically right at the level, right? It didn't really claim real estate above it. Also, in the month of October, the 10-year came close to 49.97. So again, that's 5% on the 10-year. You just take these numbers and divide by 10, but it didn't quite hit it. So we got close to 5% on the 10-year note and didn't hit it. And then we hit this 4.8, but didn't close well above it. So since then, what I want to look at is on the daily chart. So I'm going to take this monthly chart set aside and now show daily candlesticks of the Here's what I've got, okay? So within the context of knowing that there was a move higher on yields from back in the spring of 2023 here, we are now on one of the recent moves up in that advance on the yields. We are on a move lower in the 10-year that was definitely fueled by today's action if you went to an intraday level. And I think, I don't have a crystal ball, but I think it's much more likely that we continue lower into 46.65 or into 46.30. I just forgot to throw a label on there. And that would be an area for potential formation of a low on the yields chart. For this chart to trade down into 46.65 to 46.30, it seems the most likely over the next several sessions, perhaps into mid-November. It may be a choppy ride. Now, I don't have a forecast to draw here because of the way that the topping action unfolded from these mid-October areas, all right? It didn't give me a clean, singular, like V top, so forecasting becomes a little less useful in this situation. So for those of you who use loss forecasting, remember, it's a great tool when it's applicable, but it's not always applicable. Just like my take on speed trading, okay, using this indicator down below is amazing, but it's not always applicable. That's why I teach different tools within that trifecta of price, time, and momentum so that you have something to pull from your toolbox to analyze at any given time. Right now, what we're really focused on is the price action, right? The action of the candlesticks and these bar patterns. Okay, so what if this doesn't happen? What if we don't see the yields fall lower into this zone first? Well, then I think that they're actually more likely to get above this 49.14. So they'd have to clear that level in order to make a journey back to 5% and continue higher from there. So we are really at an important juncture over the next several days here to see how far down the 10-year might go, where it may stabilize on the chart, and if it would resume higher. If it keeps going lower beneath this 46.65 and 46.30, then the next level under threat is 45.32. Now, one more tool or technique I want to add on here, that's again based on the candlestick action, is a unique way that I use trend lines. So for this, I'm going to squish up, if you will, a lot of the data on the daily chart. And I'm going to come back to that low from the spring. So first what I'm going to do is I'm going to connect the low from the spring, the extreme low, and then connect it to the most recent low after it. I like to hook those into place, so I'm using TradeStation's tools to kind of snap this into place. It's called snap mode. And once that occurs, I have a precise line, okay? Now you can see that that line is sort of useless now, but what it's telling me is that this was a significant low as well on May 4th. So now I'm going to come in and I'm going to draw a line connecting May 4th to July 18th. Why July 18th? Because I'm also paying attention to the Gann drives from the May 4th low, and drives are related to the direction of action. I teach that in my Gann book and more. All right, so you can see that after that July 18th low, it was approached on September 1st. So now I'm going to take this same tool and I'm going to go to September 1st and then connect to that most recent October 12th low. This is a concept that is loosely based on fanning trend lines. That's a traditional technical approach, but I do it a little different. So now I want you to see here, check out how we're super close, okay? Touched that second trend line, or touched that third trend line per the 10-year daily chart. So you can keep these levels on your chart, and what will happen is if, okay, I don't have a crystal ball, but if the 10-year trades and posts a daily closing break below this steepest trend line, it will give me more confidence that I'll get back into this zone that I talked about earlier. If from there it continues lower and then breaks below this second steepest trend line, well, then that'll give me confidence for even weaker 10-year. Again, I'm talking about weeks and months, guys, nothing happening immediately, all right? And extending the journey back potentially towards the 4.2 to 4.0 levels when you relate it back to the 10-year yield itself. So that was a lot of detailed information. If you watch this video once, I recommend watching it again. I haven't made a video this long in some time, but I really needed to get all that in there. So I hope you found it helpful. And I'm going to continue to navigate everything the market is having to offer. And if you like this video, please hit that like button. And if you want to follow me for more, punch that subscribe button so you can always stay up to date on when I release videos like this. Catch you next time.